All right, welcome back to the Economics of Real Estate, where we dive into the forces that shape the real estate market. I'm Dylan, that's Matthew. Every week we're going to be exploring the economic currents that are going to influence property values and the real estate market, and the latest trends that really every buyer, investor, and seller needs to know about, because not only will it shape the way that you look at opportunities in the market, but it's also going to allow you to make those moves that will make a difference and change your life, as it has done for so many people before when we think about what real estate does. So, Matt, I'm really excited to be here with you today. And we're going to jump right into it, I think, in terms of talking about the biggest thing on everybody's mind, which is those interest rates, right? We've been playing with them now for 2 years, trying to keep track of everything and monitor the impacts as we've seen them have on the real estate market. So before we get into your prediction on what we think is going to happen come June, what are some of the indicators that we're looking at when we try to figure out if that's going to be a thing or not?
Well, one of the major things that I'm looking at right now would definitely be the jobs report. And we just came out with a jobs report today. And, you know, the employment change, the street was expecting about a 20,000, 21,000 increase in jobs. We got 90,000. The participation rate, 65.4%. And the unemployment rate, we were expecting 6.2, but we got 6.1. So the employment rate right now is staying strong. And for an interest rate cut, I would definitely want to see these numbers start to accelerate to the upside, because that would put a lot of pressure on the Bank of Canada to start cutting. The other one would be the CPI. And that will come out either later this month or next month. But those are two indicators that most people can follow to kind of gauge if the central banks are going to cut or not.
Beautiful. And we've got some charts that we've spent some time creating to help illustrate that for people. And one of the other conversations that I want to get into before we get to all that stuff is, what impact does our neighbors to the south have on our ability to make that interest rate cut or not?
Absolutely. So the U.S. is the engine of the economy, of the world economy. And what's happening in the U.S. right now is they're super strong. Their economy is running very hot, whereas we're seeing a lot of different pockets around the world starting to slow down. And a lot of this has to do with the strength of the U.S. dollar. And one takeaway I would say is the Japanese market. The strength of the U.S. is starting to affect their dollar. It's weakening it quite considerably, and they're getting to a point where they might have to start raising interest rates to cool the inflation in their economy. They also hold a lot of U.S. treasuries right now. So there's this teetering going on where the U.S. kind of has to say one thing, and that's that they're going to cut interest rates this year. Mm-hmm. And that's cooling the market a little bit to say, oh, okay, interest rates are coming. That'll help out some of the other economies around the world because they're going to expect that to happen. But the problem is the data coming out of the U.S. is showing a lot of strength.
That's right. And actually, we were talking a little bit about the bond markets before this call. And I'm just going to head down here, and hopefully I've got the right one. Let me just bring it up to the top of our chart here, because what we're talking about is you're saying that usually those bond markets, they're kind of the smart money. You like seeing what they're focusing on and what they're talking about. Sorry, we have to switch that there. But talk to me a little bit about that while I get the chart up for us here.
Yeah, absolutely. So one of the other charts I like to look at is the Canada 5-year bond.
Yeah.
And we can see this is a 3-year chart. And I've just drawn a trend line from the bottom all the way to the top, and we've been increasing. So the higher the bond yield goes, you know, the less likely we're going to see a rate cut.
Yeah.
The bond market is where fixed rates are based off of. Mm-hmm. The stronger this chart goes, the stronger the 5-year bond, the more you would expect to pay on a 5-year fix. So it's my thinking that we're going to see that trend line break And when that happens, it'll give me a better indication of when we could potentially see a rate cut. From all the data we've just talked about, it's hard to see a cut coming in June.
Okay.
This, to me, from all the data, looks like it could get pushed July, maybe more likely on the September side.
Okay.
One other thing we have to consider, too, is we can't get too far ahead of the U.S. And just to go on the last point about the U.S. being so strong, is Canada's going to want to see a little bit of weakness in the U.S. data to make sure that Tiff Macklem has the comfort to say, hey, you know what? I think that they're going to slow down. They're going to cut. We can get ahead of them and put a couple of cuts in prior to them.
Okay. Yeah. So we're okay with cutting before they cut, but we want to make sure that the indicators are showing that they're coming behind us and we're not going to separate too far.
Yeah, because we're already below them as it is. They're at 5.5%, their overnight rate, and ours is 5. So we're already a half of a percent below them. We can only go so much before it starts importing inflation into Canada, because it'll weaken our Canadian dollar, and anything that we're buying from the US or other places in the world is typically priced in US dollars. So it'll be more expensive to bring in, foods from outside, materials, commodities, and stuff like that.
Yeah. And so that's very important for us to watch. And at the end of the day, why we talk about interest rates so much is it affects affordability and buyers' purchasing power, right? And as we see that start to become a challenge for some, we start to see inventory sit. And then we get back into the supply and demand issue that really runs the real estate market for the most part. And it's just, this is one of those times where it's an outside factor that is impacting the supply and demand that we're facing here. And so we're going to jump into a lot of different areas of the market right now to talk about that, so you can see how this impact is being made. And at the end of the day, I think it's kind of important for us to know, okay, we've got this data and we're looking at it. Well, what can we do with it, right? And we're going to, as we go through these charts, we're going to be talking about how this can either help a seller or help a buyer make a great decision. And there's opportunities in every way. You may look at a chart and be like, oh man, this is so bad for buyers and I'm a buyer, I can't do this. Well, that's not always the case, and vice versa for sellers, right? It just means we got to take all of this information and dissect it to help us make a great decision, and that's what we're going to do as we walk through here.
Yeah.
So, Matt, our first chart here, we're looking at April actives from 2023 and then solds for 2023 as well, and we're comparing that to now where we finished off in 2024. So tell me a little bit about that. I see you got two charts here. You got York and Simcoe.
Yeah, so we got York Simcoe. We got the blue is 2023 and the green is 2024. Yeah. So if we look at York first on the left side, we've got quite an increase in active listings. Yeah, active listings have come up around 68%.
Yeah.
And sales have actually decreased by 8%. So we're really starting to see inventory pile into the market. And the same is true for Simcoe. We're up 53% on the active side and down 9% on the sold side.
Yeah.
And I think a lot of these charts are going to show us that there is a lot of inventory hitting the market, and where it's going to hit is the important point.
Yeah, and so I just marked down there, just did the quick math. We're looking at 4 months worth of inventory there on York, and 4 months there in Simcoe, and 2.4 months there in York. And it's interesting because when you see this, again, this is why you got to break down what does the data mean. You see an increase of 68% listings there in the York side, and you're like, oh man, York's got it worse. Well, really, they're only seeing at 2.4 months worth of inventory compared to Simcoe. Well, yes, they went up by a smaller percentage, but their months of inventory is stacking already at the 4 months. Now, that's not drastic, but when we break down the price points, we're going to see where that really lands. Yeah. So sliding over to the Simcoe detached here, I see that we're up, 75% year over year for our active listings. And we're going to talk more. I really want to get into the different price points that we're seeing those listings stack in to give a better picture on that. But nonetheless, you're seeing here that increase in active listings year over year. And I think 2023 was a year where we first started seeing the interest rate increases that we saw in 2022 start to impact more people. And now everybody was like, all right, maybe now is not the best time for me. We saw people slow down in the amount of listings that they were putting out there. We definitely saw the slowdown in sales volume. But now we're seeing people being like, hey, I need to start listing these things. I've got to sell some of these properties. And I think you and I are both agreed. We're seeing that perhaps a little bit more in the investor category. And one chart that we didn't prepare for today that, guys, I'm sorry, we are going to show this to you next time. But Matt and I were looking at the amount of vacant homes. So as we see homes that are listed for sale, realtors have the option to label, is this owner occupied or is it vacant? And the percentages that we saw in the vacant category was through the roof, which usually leads to us to say, hey, it's most likely an investor. It's very unlikely when realtors list a home that is owner occupied to say vacant when it's not. So I think that's what we're seeing there. What do you think there, Matt?
Yeah, no, I totally agree. We're in for some areas, we're in the 30% levels. And for condominiums, we're in the 40% of
homes being listed saying vacant.
That are vacant.
Yeah.
And I would imagine too, there's a lot of places that have owner occupied, but it's vacant because either they're not there anymore or for whatever reason. So I think those numbers are probably a little bit higher, but that's still quite a bit of properties being listed as vacant for sure.
Yeah, and I think that lends to the conversation that we'll have about some of the investors that are now selling off their homes that they were seeing, whether if they were still on a variable rate and if they had a tenant in there, it wasn't covering their monthly expenses, and it's now time to sell. They didn't want to renew anybody once somebody moved out, and now they're putting their homes on the market. Yep. Okay, so looking here at Simcoe, we're obviously still comparing 2023 to 2024, and we're just seeing that increase there. And again, we're not looking at the detached market now because we did that more so on the last graph. But here's where you can see those increases by home type, and seeing 99% increase specifically in the townhome market. It's funny because we talked about this before, Matt, that this is typically affordable housing. The affordable housing is usually where we see great activity. More people can afford to buy it. They're usually the safer investment. And I think when you see a 99% increase in townhome inventory, that's quite interesting. And I do think that tends to lead a little bit more to investor stuff. What do you think there?
Yeah, I think so too. And I would say even with the 49% in the condo market, Simcoe's not known for having a ton of condos as compared to a lot of other areas in the GTA. So I think you see more townhomes, condo towns, and semi-detached. So yeah, that number is 49%, but you've got a lot of the other listings that have more. So 99% in the townhomes, 71 in condo towns, and 57 in the semi-detached.
Yeah.
For just like you said, this is affordable housing, and it's starting to stack up.
Yeah, and percentages aside, you've got 315 condo units in the Simcoe area that are sitting there as inventory ready to be purchased, and the sales volume is just not supporting it.
No.
Yeah. York. Talk to me about York. We're seeing, again, now we're back in the detached, and if I go up a little bit, I just want to refresh my memory there on what we saw for Simcoe detached. We saw, 1,840 units available for the detached, an increase of 75%. And now it's funny, York's a much bigger place, and we're not dealing with that much more inventory.
No. And I mean, listen, 50%, still 50%. We went from 1379 to 2061. It's still an increase. But I think what's going to be interesting when we look at the charts for York is where is that inventory piling up? Where's that potential extra 50% sitting? Where it might not have been sitting last year.
Yeah, exactly. And so again, now looking at those active listings as we break it down now for York, the condo market, right? 775 active listings currently sitting there with an increase of about 92%. And over 100% there in the townhome market, right? It's quite considerable for what
it is quite considerable, and especially for York region. It's definitely more active for people wanting to move than maybe a Barrie or a Simcoe, just because of its distance from Toronto. So seeing this pile up in affordable homes is surprising, and that tells me that it's likely investors who either want to get out of the game because of tenant rules, or more than likely just pinched by the rates and mortgages.
Mm-hmm.
So that's kind of where I'm seeing that pile up happen. And I think with condos too, you're seeing maintenance fees go through the roof. You're seeing insurance go through the roof.
Yeah.
So the cost of a condo, whether it be a town or an apartment, the costs associated with that, especially with the mortgages going through the roof.
Yeah. Your monthly output is quite high on a lot of those right now, which wasn't always the case. And even when we're looking at the percentage increases on those annual maintenance fees being, over 10% in some cases, and even 7 and 8% when we used to love, that 3 to 4 or 5% even. It makes a big difference, and you got to remember that those percentages now are already on higher monthly maintenance fees, where you were looking at $800, and now they've gone up 10 to 13% instead of a $400 maintenance fee that went up 5%. Right? It makes an impact.
And I think a lot of flippers are trying to get those properties out on the market as well. But the problem is exactly those fees are what's keeping buyers from going into that. They're saying, wow, that's a lot of monthly payments I have to make. And they potentially just can't afford it.
Yeah, because when we look in here, and we'll talk about it a little bit more when we get to months of inventory in those areas, but there's opportunities for buyers here. There's a lot available. You've got a little bit more purchasing power, a little bit more negotiating power on some of these, but the numbers still need to make sense. And there's a bunch of them where you're looking at them, it's a little bit harder to justify, right?
Yep.
Yeah, so again, looking at active listings now, we see our sold data there here in the York Region Freehold. Obviously trending a little bit downward from 2023 to 2024 for our solds. I don't think we've quite landed there yet in terms of the sales. Like, I would say overall that my prediction, of course, is that we're going to outpace the sales from last year, just because we specifically had such a tail off in the later months. Like September just felt like the market hit a wall last year. So we're specifically here looking just in April, right?
Yeah.
Right. This chart's just specifically April. So it's not telling the whole story yet of where I think this year is going to end up. But it's interesting nonetheless that currently, last year was still a little bit busier. And I think that a lot of agents will tell you that same thing, that this time of year last year, we were still busier. There was more sales happening than what we're seeing right now, specifically in April, because we saw a little bit of a lull. There was a big push at the start of this year. And I think a lot of the smart money took advantage of that. If we're talking about smart money on the real estate side versus the market side, that's definitely what I saw. And this left to right increase in terms of active listings across price points, we're looking at 813 units or homes available at that 2 million plus, and we're almost at 6 months worth of inventory there.
Yep, and sales have been down, and even for the 1.5 to 2 million, we're seeing that increase as well, with the sales coming off quite a bit as well.
Yeah.
But I would say that the other segments seem to be strong. Definitely the 800,000 to a million seen an almost 100% increase in sales. So they're holding up quite well.
Still looking very favorable for sellers there. It's still a market that's moving, and what I would stress for people as they hear the news to say, like, oh, I don't know what to do, everything's kind of negative. Well, if you're making any kind of a move-up purchase, just looking at this graph in York Region, I'm excited to move up to my next house because the market that I'm in is typically doing pretty well, and the inventory is stacking. My options to purchase as I go up in price are increasing, right? So this is a move-up time for me when I look at this graph.
Absolutely, and I think that'll be a constant theme through all these graphs is what price point and what area are you selling at, and what price point and area are you moving to? Because you could be in a really strong pocket right now, and you're moving to a place where there's a lot of inventory, and you could get a fantastic deal on a property and sell your house super quick for a great price. You
can make more money in a down market typically than you do in a hot market every time. Right. So if you're somebody that's thinking about making a move, now is the time where you really need to start consulting with somebody and say, okay, evaluate the neighborhood I'm in. Here's 3 that I'm interested in. What does it look like over there? And where's my best chance to make some money? And then, of course, what suits me and my lifestyle? But this is the time to make some money in real estate.
The first thing as an investor, I always tell my investor clients is you make money on the buy.
Mm-hmm.
That's where you're going to make your money.
So true. So true. All right, let's move on there to our, now we're looking at the Simcoe region with that same graph, and it's inverted. It's so funny. It's inverted. Our units are down as we go up, obviously, in price. The one thing I will say, though, that's very important, and it's so crucial that you added it there, as we go north, our home prices, our values aren't as high. So that's why we see that graph go downwards a little bit. Because look at the months of inventory that we're seeing at those higher price points, 22 months, 21 months in anything 1.5 plus. And then looking at below that, obviously 800 to a million is still very balanced, still a fairly sweet spot, I would say.
Yeah, it's a sweet spot. It's in that area as months of inventory wise, but you can see the sales have come down quite a bit, and this is the hottest time of the year to rack up the sales. So we're definitely seeing a big pinch. And again, for Simcoe region, I think when the market's hot, Simcoe can do quite well because a lot of people are forced out that way. But when the market pulls back, it's almost like a tide.
It pulls back to that original benchmark again, almost, doesn't it?
That's right.
Yeah. Yeah, no, that's such a great point to acknowledge, because when you look at that drop off from 2023 to 2022, so your your blue bars down to your red bars, specifically even in those lower price points, right? We talked before about, hey, this is affordable housing. How come this stuff is sitting? Well, there's that decrease in sales and that increase in active listings.
Yeah, and again, I think this is investor related to a degree as well, because investors only have so much money, and Simcoe was a great place for people to park money. And to be honest with you, long term, it will be a great place to park money because there's going to be a lot of growth in that city.
Exactly.
But sometimes people over leverage and put themselves in a position where they got to get out. And that can be an opportunity for someone else, especially in the areas where we start to see a lot of inventory pile up, so that you can get a great negotiation.
Yeah, also new development, right? Like we're going to talk about that in one of our next shows, what's going on with some of the builders there. But definitely in areas where you see new development and new rushes, you get that extra flood of inventory because so many actual new units have now entered the market that weren't there before. As stuff closes. Again, still inverted here as we look in Barrie, as we slide down there. Obviously, in the 1.5 to 2 million, we're seeing tons of months of inventory with only 1 and 2 sales really in April of last year and this year, and now with 23 units available, that's stacking a little high, but big increases or 2 months of inventory, I would say, for your 0 to 800,000 there, but nonetheless a big drop off in terms of sales volume from last year.
Big drop off, and also I want to point out as well, like with the buyer's market being in the million plus, it's going to drive these prices down, and it's going to go across the board at some point. It's going to have some downwards pressure to where the prices are on those lower ends too. If you're sitting there 23 months to sell $1 million to $2 million, some of these people are going to dump it for a lower price because they absolutely have to. And that can affect the market kind of like dominoes on the way down.
Totally. And again, when you let's look at even something a little bit closer where I think we're going to see that impact first is your $1 million price point. We're sitting at 7.6 months worth of inventory there. And that downward pressure that you're going to feel it in that 800 to $1 million, which is where you're starting to see those months of inventory move up a little bit to that 3.4. And I think that's just, like you said, that's that downward pressure that we're going to see. And now sliding over to Georgina. Decent amount of months of inventory here. Sales dropping off just a little bit. And some of those price points, I got to say, it seems Georgina has held itself better than most. What are your thoughts on that when you're looking at this? And I know it's always very different what the charts say and then what the boots on the ground say. And that's the great thing about making sure that you're working with a realtor, because you see it day to day. But when I look at this real quickly, just the discrepancy between sold and from 2023 to 2024, it's not as drastic as what we saw in some of the others.
No, especially for up to the 1.25. Now, we've got Highway 404 that goes right up to the Keswick area.
Yeah,
We have that too with Barrie, but Georgina is a little bit closer.
it is.
So I think that their prices would hold up a little bit better. They do have, a lot of huge properties. And I'll be honest with you, when I look at this chart, I see opportunity for buyers in here. I really do.
Mm-hmm.
Especially if you want a little bit more space, a little bit more land. These months of inventory are building up, and I suspect that we're going to see a continuation of this. So for the 800,000 to the 1.25, we're right at 4. We're getting into that balanced market.
Yeah.
But how long until we get into that seller's market?
Yeah.
And if you're coming from the Aurora or the new market where we've seen price points really stable and strong, and you want to go a little further north, there's a great opportunity here to get a fantastic place for a great price.
Yeah, I think that's a fantastic point to make. Is again, when we talk about looking where you're selling and then looking where you're buying, you can come out quite well in these kinds of markets. East Gwillimbury, now we've got our trend line kind of heading back up to the right again as we see the months of inventory increase over, or the units increase over our price points there. And yeah. East Gwillimbury holding pretty tight, even doing better in terms of sales volume from 2023 to 2024. And that $1 million price range is looking really good.
Yeah,
yeah, that's pretty strong. What do you think when you look at this graph?
Yeah, sales super strong up to the 1.5 million. We're beating last year across the board. Mm-hmm. Now, one thing I will mention is with East Gwillimbury, you've got Holland Landing, you've got Sharon. Sharon typically will be on the higher end side here, with Holland Landing priced more between the 1.25 and below. So maybe what we're seeing here is Holland Landing in the tight zone, and Sharon, because of the price points, having a little bit more inventory sit. And that's been a theme across the board as well. Totally. Is we've seen the higher price points, more inventory building up, and sales definitely down.
We had a lot of new subdivisions up that way that closed, and again, going through the peaks of COVID, the price points there were just astronomical in terms of what you would have typically expected for that area and the size of some of those homes. I remember shopping guys, going from Aurora and just exploring our options. Should we go further north or try and stay in Aurora? And dollar for dollar at the peaks, they weren't that far off in terms of price point. It was like, I'd rather spend a little bit more money and stay in Aurora because I'm not actually getting that much more for the price bracket that I'm in as I move into that Sharon area. And I think what we're seeing now is that flip side of that is, okay, things have slowed down a little bit, and now we're stacking, 5 months worth of inventory on anything over 1.5.
And I think what we're going to see later is some of those Aurora, Richmond Hill, their high-end market starting to pile up as well.
It is.
And like I was saying about the tide going from out to Barrie and back, that happens with East Gwillimbury as well. Yeah. If you're in the luxury market and you're priced out of Richmond Hill, Aurora, East Gwillimbury was a fantastic option for you.
Yeah.
Now that tide's going back, so I think in the next charts we'll see that maybe the options for the high-end people are the Richmond Hill and the Auroras.
Yeah, I agree. So looking at Newmarket, tell me, first thing when you see the shape of this chart versus the other ones.
So the other charts were either going up left to right or down right to left or left to right. This one's more of a pyramid. We're seeing the highest buildup right in the middle at the 1 million to 1.25.
Yeah, just a lot of buildup right there, which is kind of interesting that we're seeing that, and we still see a little bit of a sales drop, specifically in the million to the 1.25, and we see that growth there in the 800 to a million mark. So it's kind of interesting to see, and I'm as I look at that and I see the stack, it's kind of interesting as I think about the different pockets in Newmarket. And specifically in the last couple of years where there was neighborhoods that wouldn't have gone up to the 1.5 or the 1.4 that ended up hitting that. And I think we just got some guys that are stuck on either side of that fence at the moment.
Yeah. Yep. And I think going forward, when adjustments start to be made, you'll see that in the chart. But I would say that every chart that we've looked at so far, I feel like Newmarket's really held up the best as supply and demand. So if you're a seller, you're still in a great spot in Newmarket because the supply just hasn't outstripped the demand yet.
Yeah, and you know what I love looking at this, looking at the stuff over 2 million. That's got to be the lowest amount of months of inventory we've seen in that price point, where you actually have enough homes to justify it, and that's staying quite strong in comparison to the others.
Yep.
All right, Aurora. Okay, everybody, look at the right side of this graph. Newmarket, everything over 2 mil. Aurora, everything over 2 mil. Now, Aurora has some really nice neighborhoods. We have some pretty expensive homes here, so it does make sense that we're seeing more of this. This might be on the cusp of how we broke down Richmond Hill, so you guys will see that in the next slide. But we're seeing 66 units and a total of 7 months worth of inventory over that 2 mil price. And I think actually for next month, Matt, as we talk about this more, I do think that we should break it down, because 2 million in Aurora isn't what it used to be. And yeah. I think that might be why we're seeing such a stack here. But nonetheless, that's the deal. $2 million is $2 million. It doesn't matter where you're spending it. It is still $2 million. And that's what we're seeing, this big pile here.
Yeah, and that's it. At the end of the day, there's only been 9 sales past the 2 million. So even when we break it down, we're likely to be in that 7-month territory anyways. But what stands out to me,
5 is going to be absolutely disgusting. You're going to be like, there's been 0 sales, or there's been 1 sale, and there's 50 listings, right?
It'll be good to see definitely over the 3 million and higher, just how many of those really high end homes are sitting on the market. Yeah. But another thing that points, like I see in this chart, is sales across the board for every category type are down year over year. Yeah.
But I will say 1.5 to 2 mil is looking pretty tight. I'm pretty impressed there, and I think specifically about how Bayview Northeast has been performing. Like, they've turned around a little bit there, and that's a pocket that I've just been watching because I like to watch it. But nonetheless, it's interesting to see that so level.
Yeah, sales are down, but inventory is very tight still.
Yeah.
So even though there's been less sales during the month of April, inventory's been right there to make it still very competitive for sure.
Yeah, we're under 2 months worth of inventory there quite easily. So it's kind of interesting to see that. And then the 1, 2, 5 to 5, it's creeping up maybe just to the 2 months worth of inventory, which is still very favorable for sellers. Like, I think that whole stretch there's still really looking good. We just got to break down that 2 million plus and see if it tells a different story. But because I think there are a good chunk of homes around that 2.2, 2.3 that we might see a little bit more movement in than this chart is saying. But I could be wrong. We'll have to break it down to see. So as we climb into Richmond Hill here now, still looking fairly strong for sellers. This was the note that we made before. This is one of the first charts as we're traveling further south now. We don't have a category below the $1 million range. We go back to Aurora. There, we did keep it in there just for that one, the 0 to 8. We've acknowledged that those 4 units are definitely priced for multiple offers. Nothing's selling at that point. But, here we come to here we come back down south to Richmond Hill. Everything's over $1 million. And even though we're down by 2 units, from the previous year, we're still really tight there with 22 sales and 33 active listings. We're well under 2 months worth of inventory. So that's going to be a tight little market there. And as we climb up, so Matt, I'm going to throw it to you as we move on to the next one here, looking at 1.25 up to the 1.5. What are we seeing there?
Yeah, we're definitely seeing a little bit of separation. The 1.75 to 2 million, we've got sales down year over year. They're almost by half, with inventory sitting at 5.2 months. But then we see kind of past that where 2 million to 2.5, it's still pretty tight for sales, and we're only sitting at around 3 months inventory. So still a bit of a seller's market there.
Yeah, definitely. I want to go back to that just real quick, because that 1.75 to 2, it feels like it's a little bit of a no man's land. I'm wondering if the people that should be under 1.75 have pushed their price up a little bit and aren't willing to let go of it, because nothing just seems to be selling in that bracket. Maybe they're stuck between two worlds a little bit.
Yeah, I totally agree with that.
Yeah, because it's not budgeting, because we're seeing over 2 million is still moving quite well. It actually has more sales than the stuff under 2 million, but just maybe buyers not finding value in that particular spot right now as they see they let the inventory sit. They're at 5 months there, and we come back to that 2 mil to 2.5, which is that's the funny thing. It's an even bigger bracket of pricing. We're looking at a $500,000 price range compared to our $250,000 price range, and we're only sitting at 3 months worth of inventory. So that sweet spot right there. If you've got the right product, it's moving.
Absolutely. And then 2.5 million above, we've got an increase in sales. We're seeing demand there, but we're also seeing quite a bit of inventory pickup on that high side, which is what we're seeing pretty much everywhere.
Yeah, and again, we go back to, let's compare it to Aurora for a minute, which we've acknowledged we're going to break down the price difference in. But you're sitting at 66 units or properties available with 7 months worth of inventory. And then you come back to Richmond Hill, we're under the amount of months of inventory because we've got more sales volume there. But our units are up. We're up to 124 in comparison. So there is just, again, as you go south, there's price points go up a little bit. And Richmond Hill being a much bigger spot, there's more pockets that will command that, over 2.5 mil.
Yeah, absolutely.
All right, let's fly over to, wrong button. Let's fly over to Durham here and take a quick look. And when we saw this, right, we're like, whoa, 0 to 800K. Look at how tight that market is in Durham right now. And it's not just tight because it's a small market in that price range. There's a ton of sales. Like the bulk of the sales that happened in Durham were between 0 and 800. And we've got less than a month's worth of inventory if things stay on the same pace.
Yeah. No, that's super tight market. A lot of bidding wars going on there right now, clearly. And actually just had some clients of mine have to get into a bidding war for a property at the $800,000 mark. Yeah. So very, very tight market in Durham for anything under 800,000, but really anything under 1.25 is still extremely competitive in that area.
Yeah, we're under 2 months there in the 800 to a million range, with sales staying level, up a little bit compared to last year in the same category, and then up considerably if you look at it in percentage wise for our 1 million to the 125. Jumping up to 142 sales from the 109 last year. And still only 261 units available. So, under 2 months worth of inventory there. And even at the 125 to the 15, we're only now getting to 3 months worth of inventory. I'd say that these last three price ranges very comparable. And then this is the one that you and I love when we're looking at this because we see opportunity. You get to 1.5 and 2 mil, we're all of a sudden up to 7 months worth of inventory, only 20 sales, 141 active listings. If you've got a house right now anywhere in that million to 1.5, this is the best jump. We haven't seen, I don't think through any of the charts, we saw it going up one price category to see that much of an increase in inventory for months of inventory. Like I want to be owning something right now for 1.2 and buying at 1.5. Absolutely.
Yeah. And especially for Durham, what a fantastic opportunity to get something bigger land, bigger property. Yeah. Just a lot of inventory sitting there and potentially a lot of people willing to move.
Yeah.
Quickly.
Yeah, absolutely. And then, of course, as we get to the more luxury market here in Durham, it is a smaller market for the region. We're up to 11 months worth of inventory, almost 12 months worth of inventory when we get to the $2 million range. So, I see these and I'm like, there's definitely opportunity for the people that have a little bit more money because there's no competition up there. It's a great time to do some negotiating. And ideally, you're doing pretty well if you're coming from one of the lower price points. But nothing is good. I wish you could see my mouse. I'm just circling this 125 to 15, over and over again as we talk about the price range just above it having such an increase in listing inventory for themselves there. So, let's go.
And this is what I love about the charts, Bill, and especially these ones, being able to show our clients exactly where the value is, where the opportunities are. If one client wants to go from one price bracket to another, or even one price bracket in one town to another town, these charts and these statistics help us show them that, fantastic opportunities over here, lots of inventory. You might get the house of your dreams for a fantastic price.
Well said. And when it comes down to the charts as well, like agents, we always praise agents for having a good beat on what's going on in the market because you're seeing it. I've talked to 2 agents today. They're talking about, man, showings have really slowed down on my listing. I'm on day 4 and I've only had 2 showings. This is not what we were seeing a month ago. So again, great beat on the market. But unless you zoom out and look down at the forest like we're doing with these charts, you can feel it, but sometimes you don't know what it means. This gives us a great picture on what those feelings mean as we go through what we're experiencing on our day-to-day.
That's right.
Yeah, absolutely. So I want to wrap up our charts here and just talk about what we're going to be looking at going forward. So there's 2 Canadian ones here on here specifically that we're going to be watching. And Matt, I want you to tell us a little bit about those before we wrap up today.
Yeah. So, looking at the indicators in the market is really going to give us an idea of when are we going to get our rate cuts? And why I think that's so important is because there are pent up buyers sitting out there waiting for this to happen.
Mm-hmm.
And there's also pent up sellers too, potentially, that are holding on. But if this rate increase gets extended further, they might have to be in a position where they need to put it on the market sooner than they thought they would have to. So what I want to do on my weekly basis is check these indicators to see where we're headed. And as of right now, I do believe that September is probably more accurate than June for the rate cut. So next week, building permits from Canada on May 13th. I want to see that more permits are getting taken out to build more homes.
Mm-hmm.
If we see a decrease in building permits, we can potentially see that in the future as less homes hitting the market when we need them the most.
Yeah, and we talked about this, Canada coming out saying we need, 4 million homes over the next 10 years, and seeing that some of these builders are holding back on that, right? Like, policy is one thing, but who's building the homes is the other thing. And I shared with you that I was talking to somebody at the town planning department the other day, and they were saying, like, yeah, we're issuing them, they're ready to go, but builders are actually letting those permits lapse and having to renew them because they're just not ready to take that on yet. 1, for their pricing, they want to get that up, but 2, for the cost that they're incurring right now. Everything's just a little bit more expensive.
Yeah. And then what else ties into that on May 15 is the actual housing starts. How many
we get to see it. We're leading.
Yeah.
Right?
And you know what? That kind of data gives us a look and say, okay, like how long does the average house take to build? And we can look in the future and say, oh, you know what? We're going to have a little bit of a decrease in the amount of homes that are being built. And that's what we're seeing builders slow down a bit because the interest rates are too high. The cost of material and labor is stretched a bit. So the profit margins for them are squeezed a little bit. So it's always good to know what the building permits and the housing starts are because it gives you a future look as to where we might be.
Exactly. And again, looking at that leading indicator of permits being issued, but then the lagging indicator, are we actually starting on these permits, right? And so that's the thing that we're going to be watching to see. And we'll have a better idea. Are we going to have some real supply and demand issues coming up again if we don't get ahead of this thing? Because right now, the only thing that's slowing down the market is those interest rates. And if and when that does turn around, it's going to come right back to our issue of supply and demand, and we just need more.
And I honestly, I think it does. I think ultimately next year we really start to hammer those interest rates down, but then we also come into a problem where we're not getting enough properties newly built on the market. And then the other thing, always, I need to know what's happening in the U.S. because the U.S., like I said, is the economic engine of the world. And how they perform affects us all. So Jerome Powell will speak on the 14th. I kind of just want to hear his language. What is he saying? What is he forecasting? Then they've also got the producer price index, the PPI, kind of cost of materials, manufacturing. And then we've got the consumer price index, the CPI, and the initial jobless claims. So we saw last week jobless claims in the U.S. actually falter a bit. They came in under consensus. And that kind of got the markets all like, oh, we might see interest rates fall sooner.
Mm-hmm.
So, but that was only 1 month. And they're going to revise those numbers next month as well. So I think next month, if we see another fall, then okay, maybe the U.S. is starting to slow. And we might see those cuts come a little bit sooner, but you can only take it month by month.
And again, as you talked about last time, those revisions have always gone the opposite way. when they've happened again. So I don't think
Yeah, the
that's
last 3 to 4 months, I've seen the one number come out and it's been revised to the higher side. So that's why I'm interested to see if these revisions will come in ahead of what the consensus was. And if so, then really nothing of importance happened last month to give people a reason to believe interest rates would come down.
Okay. All right. Well, that was our show for today. We are going to make sure that we are doing this every week. Matt is fantastic at watching these numbers, which is why we put this show together, to help you guys kind of have a better insight into what's actually impacting the home values and the real estate market in general. So this is something that we're going to be doing more regularly. We hope you enjoyed it. Please tune in, check us out, and we look forward to seeing you again next time.
Take care, guys.